Hi, Leeb Group viewers. Today is Monday, December 7th. This is Greg Dorsey. We had a late volume trading today that saw safer equities such as consumer staples, telecom, and utilities advance, while financials, energy, and information technology gave up some ground. From a technical perspective, stocks are, as measured by the S&P 500, are stuck in a minor trading range, bounded by 1120 or so on the upside, and 1080 on the downside is probably the short-term risk. Longer term, we're still quite concerned with the market's valuations these days, especially in the absence of strong earnings growth. In the commodity space, gold was under further selling today, selling pressure, following last week's round of profit taking. Here, the downside risk is probably 1050 or so, or maybe a little less, but not significant. An even greater decline would seem quite remote at this point. From a psychological perspective, consider that when the bull market in stocks got underway back in 1982, the Dow Industrials broke through 1,000 and never looked back. We could see the same thing with gold right now. Clearly, the Federal Reserve won't be raising interest rates for a long time to come. In fact, it's increasingly looking like we're going to need more quantitative easing, and perhaps even further fiscal stimulus to spur the economy. That's going to make precious metals the hands-down investment choice. Also worth watching in the commodity space is crude oil, which is entering the danger zone for the economy and the stock market. While prices were down today on a year-over-year basis, crude is now up some 80%. And should prices climb to $80 a barrel or so, which is quite attainable with China growing so strongly, it'll make any recovery here in the U.S. all the more difficult to achieve. That's it for now. Thanks for stopping by, and we'll see you again soon.